All right, Assalamualaikum and a very good morning to everyone. Thank you for joining the virtual Islamic Banking and Finance series. This event is part of the initiative taken by the INSEF Alumni and Unit and Career Services. Other than providing a student alumni faculty network platform, the objective of this Islamic Banking and Finance series is to provide a platform for INSEF faculty members and industry experts to share new insights and to discuss current issues within the Islamic finance industry that can benefit students and alumni. Today's session will be on the need for a comprehensive governance code to regulate Islamic social finance institutions. It will be delivered by Associate Professor Dr. Aisha Muniza. We will be covering a few topics in the sessions, which are overview of Islamic social finance instruments, Islamic traditional and innovative instruments, issues and challenges in Islamic social finance institutions and instruments, selected case studies of mismanagement and corrupt practices. Do we need a uniform governance code to regulate Islamic social finance institutions? What should be covered in the governance code for Islamic social finance institutions and way forward? Before we start, just a little reminder that you should uh, please ensure that your microphone is always on mute during the session. But let's say if you do have a question, you may ask directly to the speaker or type your question to the chat area. Please introduce yourself first by mentioning your name and where you are from before asking the question. Without further delay, I will hand over the session to Dr. Aisha Muniza. Thank you.
Thank you very much, Sister Farisha. Welcome to all of you to this session. Assalamu alaikum wa rahmatullahi wa barakatuh. So the topic that we are going to discuss today is about the need for a comprehensive governance code to regulate Islamic social finance institutions. There are many issues that we've faced even during the pandemic when we talk about regulating Islamic social finance. Because at the end of the day, we are talking about getting transparency, getting confidence of all the stakeholders involved in the Islamic social finance institutions, or we can say tools. Having said that, let's look at what we are going to discuss today. So we are going to briefly look at the overview of Islamic social finance instruments. What are they? In case if you are new to this area, you'll be able to still understand what we are talking about in this context. Next, we are going to look at Islamic traditional and innovative instruments. The most important part that we are going to discuss today is the issues, challenges in Islamic social finance institutions and instruments. After that, we will also look at the selected case studies of mismanagement and corrupt practices in relation to Islamic social finance that we see in the public domain. Next, we are going to look at whether we need a uniform governance code to regulate Islamic social finance or not. I think in this part, if you can participate in expressing your views, that would be very good, because by then you would be having a good grasp of what we're talking about. Next, we'll look at what should be covered in the governance code for Islamic social finance institutions, because at the end of the day, if you don't have an idea of the content of what we're going to cover in the social finance institutions governance code, it'll be difficult for you to understand why that is required. And finally, we will end with the way forward, whereby we are looking at the future prospect of how to achieve this. Okay, with this, let's look at what you are going to learn in today's session, or at the end of today's session, what should you understand? Okay, so at the end of today's session, you should be able to comprehend the significance of Islamic social finance, issues and challenges in managing Islamic social finance, and finally, the need for a comprehensive governance code to resolve the existing issues and challenges in managing Islamic social finance by understanding the contents that ought to be covered in it. All right, let's start today's session. Now, we'll start with the overview of Islamic social finance instruments. However, in order to understand Islamic social finance instruments, it's important for you to understand the general overview of what Islamic finance is all about. Now, when it comes to Islamic finance, we always have this generic definition whereby we say that Islamic finance is all types of financial activities that are aligned to Sharia. And when it comes to Sharia, we are not only talking about the primary sources of Sharia, such as Quran, Sunnah, or Ijma, but we also talk about the secondary sources of Sharia, such as Saddu Zaria, blocking the means, or Uruf, which is customary practices, so on and so forth. Therefore, what is required to be understood here is that whenever we talk about Islamic finance, we are talking about using Sharia as a basis to validate all types of financial activities. And those validation is done through a process that is followed. And this process, how do we ensure that the financial institutions dealing with Islamic financial finance follows Sharia is through Sharia governance mechanism. So like corporate governance, we do have something called Sharia governance, which simply means that we try to adhere to Sharia within the organization or the financial institution in such a way that it becomes systematic. Okay, so with this, we need to understand that today, when we talk about Islamic finance, we are not only talking about Islamic commercial finance, but we do have another segment which is called Islamic social finance as well. So broadly speaking, Islamic finance can be divided into two main categories. One is Islamic commercial finance, and the other category is Islamic social finance. Now let's look at what Islamic commercial finance is all about. When we talk about Islamic commercial finance, we are talking about Islamic banking, which is offered by the Islamic banks in general, Takaful, which is the Islamic insurance offered by the Takaful institutions, and Islamic capital markets, which are the capital market activities that are aligned with Sharia. For example, let's say Sukuk, Islamic equities. When it comes to Islamic equities, we're talking about Sharia screening and things related to that. Is there any question that anybody would like to ask at this point? No, right? Okay, next is Islamic social finance. So Islamic social finance basically are those types of instruments or institutions or tools such as zakat, sadaqah or infaq, waqf, social takaful, Islamic microfinance. Now, when it comes to Islamic social finance, what we need to understand is that Islamic social finance instruments can achieve social goals by helping each other economically with or without profit. There is a misconception among us. Sometimes we believe that if it's an Islamic social finance instrument, it should be given for free. There shouldn't be any element of profit. But the reality is that even in Islamic social finance, for the sustainability of certain types of Islamic social funds that you receive, depending on the type, you may still engage in getting profits. However, we have to understand that for different types of Islamic social finance instruments, there are different Sharia parameters which are applied. For example, if you use Zakat fund, can you make profit out of Zakat fund? The answer is no, because the nature of Zakat doesn't allow it. But when it comes to, for example, let's say cash waqf, you could still make some profit, provided that you structure the mechanism in such a way that you could get some profit, so that through the profit mechanism, you can sustainably divert or channel the funds to those who are in need or the beneficiaries. Now, Islamic microfinance is a typical example of how a profit can be made through Islamic social finance as well. Now, when it comes to Islamic microfinance, the profit margin you put could be lower than what you find in Islamic commercial finance institutions. But at the end of the day, there is no prohibition in using the same Sharia compliant contracts used in Islamic banks as well. For example, you can even engage in murabaha trade. Mudaraba financing could be also given. Even all those types of Islamic commercial finance contracts that you see in Islamic commercial finance can be used. Okay, so with this, let's move to the types of Islamic finance instruments and institutions. Now, what you need to understand here is that there is no exhaustive list for Islamic finance institutions or instruments. This means that this is a list which can be growing over time depending on what is happening in the market. For instance, classically speaking, the Islamic finance instruments and institutions that we find are zakat, sadaqah, waqf, takaful, and qard hasan, and kafala also could be in the list, Islamic microfinance. But in the recent years, we've also found that sukuk can also be used for Islamic social finance purposes. It just needs to be structured in such a way that it benefits the society more, and it is structured in a manner that people would appreciate it as a Islamic social finance instrument or institution that allows people to engage in such activities. Now what we are going to do is we are going to briefly look at each type of common type of Islamic social finance instrument so that at least you understand the basics of it before we move to our main topic. Now, when it comes to zakat, I think everybody knows the importance of zakat as a socio-economic tool to the society. When it comes to zakat, it is not only mu'amalat activity, but it has a component of ibadat or worship as well. Zakat is the third pillar of Islam. Therefore, for every Muslim who's eligible to pay it, it is a must to pay it to the beneficiaries, 8 categories of beneficiaries mentioned in Quran. Sometimes we call these 8 categories of beneficiaries as the legal recipients because we know them from Quran itself. And the verse which is seen in the slide indicates to whom this zakat could be given to. Now, when it comes to zakat, there are 2 types of zakat. One is zakatul mal and the other one is zakatul fitr. So zakatul mal is something that should be paid by those who are eligible to pay if they have a certain amount of money, and it is paid once a year. So in short, we can say that zakatul mal is paid once in a Hijri year, that is how, if nisab or the minimum amount of money which is the zakatable amount is met. However, zakatul fitr is paid every Ramadan before Eid. Okay, so what we need to understand here is that the Sharia parameters for zakat is very clear. Number one, the payer of zakat should fulfill certain criteria depending on the type of zakat paid. Number two, once the zakat is paid, it should be directed or channeled to those legal recipients who are mentioned in Quran. You can't create your own recipients in your own manner without categorizing them into these 8 categories or legal recipients which are stated in Quran. So when it comes to zakat, today we can see that different countries manage zakat in different manner. In some countries, it could be in a centralized manner, while in some other countries, it could be in a decentralized manner. However, the important part is that zakat must be given to its beneficiaries so that we can see socio-economic development happening. And it is something which is the right of these 8 recipients rather than something they have to beg or ask for. So this is something we have to manage in the manner within what Allah subhanahu wa ta'ala has prescribed. Next is sadaqah. So when it comes to sadaqah, we can say it's a voluntary activity because voluntary activity here means that anybody who would like to give charity could do charity at any time of the year. Any amount could be given, and to anyone you desire, you could give sadaqah. There aren't any legal inhibitions like what we see in zakat, because sadaqah is a non-obligatory act. Therefore, anyone who thinks that they want to give sadaqah and who thinks they are eligible to give sadaqah, they could do so. And they could choose flexibly to whom that money could be given to. They don't need to justify why they are giving that money to them and to which category, or whether there should be certain qualifications qualified before they give that money to the recipients. Therefore, there are a lot of flexibilities when it comes to sadaqah. Okay, so what we need to understand at this point is that sadaqah is also a tool that's used in Islamic social finance. Especially, for example, let's say if you pay zakat, and apart from above whatever you pay to the amount you have to pay as zakah would be considered as sadaqah, and it wouldn't be considered as obligatory zakat amount. So sometimes when we pay zakat, we also pay sadaqah with it. How do we differentiate it? Zakat is the amount, the legal amount that we are eligible to pay as zakat by following the Sharia parameters, and whatever above it or in excess to it would be considered as charity. Okay, and sometimes since we are giving something to someone, or we are spending something on others, sadaqat is also called as infaq, because it's the activity of giving something to another person without any consideration. Okay, so what we need to understand here again is that in sadaqah, we don't expect anything in return. What we expect, if we expect anything in return, is the reward that we are supposed to receive in hereafter, but there is no consideration that is paid. So when it comes to sadaqah, today you see that a lot of people are engaged in sadaqah, but we don't normally use the physical type of sadaqah giving norms anymore. With pandemic, everything has changed. Even sadaqah is online done. Likewise, through social media, also we see a lot of online sadaqah campaigns happening. Therefore, the previous way of doing it, the physical way of doing it has changed, and we see it also being changed due to escalation of adoption of technology. Next is waqf. So waqf basically refers to a religious endowment. Again, when it comes to religious endowment, this is a voluntary act, meaning that whenever you want to do something like this, if you think you have the capacity and the capability, you can do so. There aren't any strict Sharia parameters that tells who can do this, right? So therefore, we can say that if you want to create a religious endowment, you can do so. And nowadays, when it comes to waqf, the most famous or the common type that we see is movable waqf. Among movable waqf, cash waqf is very predominant. Now, when it comes to cash waqf, the principle that we need to understand is that first we have to receive the waqf money from the donors. Once we receive it, we need to first invest it, right? After investment, whatever is received as profit or the revenue can only be channeled to those who are in need or the beneficiaries. So this is the way how we sustainably manage the cash waqf funds. And this is something sometimes we forget, and we believe that there is no difference between waqf and the normal charity given. However, there is a difference in this regard because of the component where the money received is first invested, and whatever is received from the investments are channeled to those who are defined as beneficiaries. Next is social takaful. Social takaful is something which is often not so much spoken about. It might be because sometimes it's very hard for us to differentiate between micro takaful and social takaful in the way how it is practically applied in some societies. But let's try to understand the difference between social takaful and micro takaful. In micro takaful, there will be a small contribution which is taken from those who are participating in the fund or from the contributors. The amount will be lower, the contribution amount will be lower than that of a commercial takaful product. However, in social takaful, it's a third party who will be providing the contribution to those who are participating in the fund. So for example, in Malaysia, we have Salam Takaful, which is provided by the government. So in that, it is the government or a third party who is giving the contribution. The participants are not supposed to pay anything. So that is what we mean by social takaful in this context, because some of the members of our society are not capable of giving their own contribution to protect themselves from future uncertainties, and therefore we need some participation or some kafala from third parties to do so. And therefore, these types of products are maybe not so commonly acknowledged, but it might happen in societies. And this is also an important Islamic social finance product, because at the end of the day, there are certain uncertainties from which we need to protect certain segment, marginalized segment of the population, so that at least they could live an honorable life in the world. Next is Islamic microfinance. So Islamic microfinance is basically set up to achieve financial inclusion, meaning that there is an unbankable segment of a population living in a country. So in order to assist them to come to a financial institution and get the services required, we have Islamic microfinance. So we can always say that microfinance is something whereby we are offering financial services to those who are unable to go to Islamic commercial financial institutions and get those financial services. So there could be, when we talk about Islamic microfinance institutions, there could be products which are structured for making profit and for not for profit as well. So for example, let's say if the source of fund is coming from zakat, definitely they won't be making a profit out of it. But if it is coming from cash waqf, profit could be made in the manner which they prescribe, and therefore commercial contracts like murabaha or musharaka can still be used in Islamic microfinance. It's just that the profit margin which they try to get from the customer would be lower than that of Islamic commercial financial institution. Now, from the statistics, it's clear that there are a lot of microfinance institutions serving different segments of the population who are marginalized. There are more than 140 million low-income people worldwide who are using these facilities, showing that it is still a popular mechanism among, whether we are talking about in the context of Islamic social finance or conventional social finance, it's still a popular type of financial institution. Okay, so before we proceed to the next part, do you have any question about what we have discussed? I guess not. Okay, let's move to the next part, issues and challenges in Islamic social finance institutions and instruments. Now let's look at what are the main or the common type of problems or issues that we face when we try to implement these types of Islamic social finance institutions or instruments. Number one is lack of trust among contributors. Now, what this simply means that in a country where there are Islamic social finance institutions dealing with zakat money or waqf money or sadaqah, when people want to pay to these institutions, whether it is government institutions or non-government institutions, the biggest concern the contributors have is whether whatever they pay will go directly to the beneficiary, or whether there is transparency among these financial institutions enough for the contributor to understand what happens to the fund which he is giving to the intermediary. So lack of trust is one of the concerns which the contributors always say, whether it's a government institution or a non-government institution. If you don't have proper governance mechanisms or proper disclosure requirements, especially the continuous disclosure obligations set, there would be definitely lack of trust among contributors. Okay, next is lack of transparency on the part of the ISF institutions in the way the funds are managed. So again, if there aren't any parameters set to tell the public that this is how the Islamic social finance instrument is going to manage the funds, this is the way how we do it. And if you don't disclose such rules and regulations, and if you don't give assurance to the public that this is what actually you are doing, then there will be again lack of trust, and due to lack of trust, definitely the funds that would be received by these Islamic social finance institutions would be lesser than what is anticipated. Next is practices that lead to corruption and management of the ISF funds. Now, often when we open the newspapers or when we try to look for some information about how Islamic social finance instruments are managed, we tend to come across a lot of corruption and mismanagement practices among the Islamic social finance institutions. And this could be due to lack of law or due to lack of procedures or SOPs among themselves. But because of this news that we hear from different parts of the world, definitely it shows that there are some issues that we need to resolve in this regard within the Islamic social finance institutions. And one of the reasons why people say that these corrupt and mismanagement practices are there is because, firstly, they don't have any procedures which are uniformly applied across the jurisdiction or even at international level in these Islamic social finance institutions, like how we have for Islamic commercial financial institutions. Every central bank, they supervise the commercial financial institutions in such a way that they have common international best practices which they follow across the globe and even at domestic level. But this is something which is absent in the case of Islamic social finance institutions. And because of that, corruption and mismanagement practices could happen in an easier manner. Next is not having adequate and proper procedures in place to identify the most deserved recipients of the ISF funds. Now, sometimes we believe that it is the job or it is the duty of the recipients to come forward and say, okay, I am a poor person, I don't have any means to live, please give me some funds. But actually, that shouldn't be the best practice. It should be the Islamic social finance institutions that should be striving to find the most deserved recipients so that at least they could identify them and give the funds to them without keeping the funds with the institution itself. Now imagine you give zakat to a financial institution dealing with zakat, and then they couldn't locate or find the most deserved recipients as per the Quranic injunction, and they were keeping the money until they find these recipients. Now, if that's the case, and if they sit on the money for several years, that simply shows that this financial institution dealing with zakat is not doing work adequately to disperse the funds. So sometimes we come across such issues which is not actually the way how it should be managed, and sometimes we wonder why it happens. And the reason why it happens mainly is because we don't have enough procedures put in place as part and parcel of the duty of Islamic social finance institutions to locate the most deserved recipients of the funds. They just sit and wait until someone comes to them and say, okay, I need money. Or they open in a specific part of the year saying that if you think you are eligible to receive this and that fund, please come and register, fill this particular form, give these documents to us, we will verify you, and then we will give you the fund if you deserve it. So this way, this classical way of doing that needs to be changed so that at least we could find the most deserved recipients and we could uplift the society in such a way that those who are needy will not be there anymore in the society. Next is not having a sustainable plan to mobilize Islamic social funds sustainably to cater the demand for it. Sometimes we feel like, if it is an Islamic social fund, the fund will always come to us irrespective of whether we do marketing activities or not. Because at the end of the day, zakat is something compulsory. So if Muslims are there in the society, they will pay zakat, and or obviously every year we are supposed to receive certain amount of fund. Therefore, active marketing of Islamic social finance is rarely done, and because of that, we don't mobilize enough funds to cater the demand. And this is something we need to also look at from a conventional perspective, because conventionally, if you look how social funds are managed, even marketing is something which is prioritized, and this is something we have to do in the Islamic context as well. Next is not having a proper system and human resource skill to manage Islamic social finance institutions. Now, this is something which we always come across, but often we don't give so much attention to this. Now, when it comes to managing Islamic social funds, you'll always see that people hire volunteers throughout the year rather than hiring those who are skilled in managing such funds. So because of that, of course, the operational cost of those institutions might not be so much adversely affected because of that. Maybe that's the reason why they leverage on the skills of volunteers rather than having skilled staff to manage it. So because of this, we often find that when it comes to the quality of management, quality of dealing with Islamic social funds, the quality is quite low, because we don't only need when it comes to Islamic social finance, the first thing that comes to our mind is that we need a religious person or a person from religious background to deal with it. However, when it comes to management of Islamic social finance funds, we also need other technical expertise who are specialized in those areas in managing funds to take care of it in a responsible manner. Therefore, this is something we need to think about. Of course, getting volunteers is also good, but leveraging 100% on volunteers, and I mean, those people will change over time. And if you don't give them proper training, often we see that governance is compromised. And because of that, we need to be careful on this. Okay. So far, any question? If not, let's move. Selected case studies of mismanagement and corrupt practices. So these are some of the case studies which I've taken from public domain, from newspapers or anything that could be found in the internet. So the first case study is doubts over Brunei Islamic Religious Council in assisting poor using zakat. It's reported in the midst of the pandemic in 2020 that His Majesty Sultan Haji Hassanal has questioned religious authorities' commitment in helping the underprivileged, noting that poor zakat management still persists. MUIB is responsible for collection and disbursement of zakat, but there are doubts over its proactiveness in helping the poor, he said. Zakat applicants and recipients were said to have visited the MUIB office repeatedly to settle matters. In addition, members of the public also have difficulty in reaching the department via telephone. So what we see here is that there isn't any good procedures implemented when it comes to helping the poor. It's not like giving a service to those who deserve zakat. It's more like people are sitting in the office and they are taking care of zakat, but they don't care about how to manage those recipients of zakat in a professional manner. Because if they want to call their office and even inquire about something, they should be able to do so. And that type of facilities must be given to the public, who are the stakeholders of zakat in that regard. So from this case study, what we understand is that when it comes to zakat management, we still have to follow the international best practice when it comes to managing clients or customers, because at the end of the day, our customers are different in this regard, but the service we should give to them shouldn't be compromised in any way. If we do that, then we are not providing enough services to them. Next is mismanagement of Waqf and Zakat by Majlis Ulama Islam Singapura MUIS, highlighted in the audit reports. So here it is said that it is reported that the audit reports published about MUIS has highlighted some governance concerns in the way Waqf and Zakat is managed, among others. It was reported that in the Auditor General's report of 2012 and 2013 that there are irregularities in the tendering process to award contracts to constructing and repairing of buildings. And it was told to Asia Sentinel that some of the buildings were used as massage parlors and Chinese temple. Further, there has been some cases of refusal or delays in providing assistance to bury those who died without any relatives in Singapore. Also, for mishandling family waqf, some families have brought court cases against MUIS. It has been also stated that one main concern related to accountability and transparency of waqf property management in Singapore is that the responsibility to manage it is given to Waris Investment Private Limited, which is a private company that is not subject to the audits made by the Auditor General, and therefore the details of the financial transactions are neither available to clients or to the general public to scrutinize. So we can see that a lot of transparency issues are here, as well as when it comes to following proper procedures. Maybe due to lack of procedures, there are certain activities that has happened which cannot be tolerated from a Sharia perspective here. Next is case study 3, which is Zakat debts in Bangladesh, an old story of piety and power. So when you hear the term Zakat debts, what comes to your mind? I mean, should we have something called Zakat debts? So basically, what I've said here is that it's even disgusting to hear a phrase like Zakat debts, and heartbreaking to see how inefficiency in Zakat distribution could lead poor and needy to lose their lives. This is not only unacceptable, but even un-Islamic as well. It has been reported in 2015 and that the total 27 people died, which include 23 women and 4 children in a stampede occurred in a struggle to collect free clothes supposed to be handed in as zakat. It's also stated that this was not the first time such an incident happened in the country. These incidents occurred as the number of clothes distributed is less than the number of receivers, resulting in zakat receivers entering into a struggle by running and pushing each other to get the clothes available before it's finished. Now, my question is, isn't there any other way we could handle this in an honorable manner without forcing debts of those who are attending to receive zakat? Of course, we could find a solution to this, and this shouldn't be the way how we manage zakat. Now let's come to the final or the main question of today's presentation. Do we need a uniform governance code to regulate Islamic social finance institutions? So before we go into the slide, I'd like to open the floor for your views. Do you think, is it important for us to have a uniform governance code to regulate Islamic social finance institutions? Anyone?
From my side, I think yes. Is it necessary? Because I see that the conventional that they're using, that the crowdfunding, that now is more compliance rather than from the side of the Waqf side, which is not using the so-called like law, following more law on the finance, and also not have a very good of the accounting system. I think some of that are not really compliance, and some of that are add and wrongly put it in the wrong way, so that they want to make it like a compliance, but it's not a compliance. So this is what I see some of the Waqf that have been done in Malaysia. So I'm not saying that all Waqf not compliance enough or not a very good governance code, but it's like they lack of something, like, because like you say that because of the lack of the skills of the personnel. Maybe this is just become a disadvantage for them to better than others, I think.
Thank you very much for your view. I'm sure what you have said is correct, because we see that today with evidence that there are some mismanagements and corrupt practices happening, right? So from in the chat box, Isa Hamadu has said it is necessary to have regulatory framework. Financial institutions need to be controlled in order to obtain efficiency in the market. Thank you for your opinion. As Rina said, yes, we need greater transparency to eliminate abuse or mismanagement through greater scrutiny. And we have some of your colleagues. Ismail Muhammad has said, yes, definitely. Ismail, maybe you would like to elaborate it a little bit, if you are available to say something.
Assalamu alaikum.
Wa alaikum salam.
Yes, I have a point that a proper governance framework will provide public confidence, because most of the social finance is channeled from public, such as zakat itself. So that is one point, and the other point is that a proper governance framework will also help like Islamic banks and other Islamic commercial financings, because they also actively engage in Islamic social finance. We have seen a lot of institutions in Malaysia and elsewhere as well that use in Islamic social financial instruments. Thank you.
Yes, so to create the synergy between Islamic commercial finance and Islamic social finance, it's also important to have some kind of a yardstick, right?
Yes, and also public confidence. Thank you.
Yes, thank you. Any more opinions from the audience? Shamimi?
Yes, I think I agree with all. Yes, we really need this kind of governing codes in all the Wakaf social finance institution, because it is really obviously that misuse all the fund that should be.
So in order to ensure that we follow good governance, we need to have some rules, right?
Yeah.
Thank you, Shamimi. There's one more comment that we received from Isa. However, government participation needs to be moderate. Isa, would you like to say something? Isa, are you able to say something? Okay, I guess he's not able to say it, but he's typing. Thank you for your participation, really appreciate it. All right, now let's look what's here. Now, definitely, Islamic social finance is considered as the informal sector of economy, and we don't give so much emphasis or importance to it, just like how we give importance to Islamic commercial finance. So because of that, often we don't have so much strict regulations which we enact to self-regulate these financial institutions. So because of that, definitely, we need to come up with a certain benchmark or a certain standard that could be followed by all the Islamic social finance institutions that are operating in any country. Whenever they deal with zakat, sadaqah, awqaf, or any other type of Islamic social finance institution or instrument, they still have to follow those yardsticks. Therefore, definitely we need a uniform governance code that will regulate all types of Islamic social finance institutions, irrespective of the type. But one thing you need to understand is that when it comes to Sharia parameters followed, there are certain governance standards that we find which is issued by different standard setting bodies, locally and internationally as well. But when it comes to governance mechanisms that could be followed by all types of Islamic social finance institutions, irrespective of the type of Islamic social finance tool which they deal with, we don't find it. Therefore, it's very important for us to come up with a comprehensive standard to ensure that there's uniformity across the globe, irrespective of the jurisdiction, irrespective of the domestic laws which they follow. Okay, so this is what should be done. So if you want to do something like that, now the question is it an easy task to do that, or is it difficult, or what should be the content of such a governance code? Okay, so this part deals with the content of the governance code for Islamic social finance. So number one, the area focused would be board governance. Okay, so basically, that is the part we have to talk about the responsibilities, qualification, and composition of the board who are going to deal with Islamic social finance institution. Okay, so that part could be taken from the general corporate governance codes, which is followed in the jurisdiction. Next is Sharia board governance. Now, the idea here is that it is important to have Sharia boards or Sharia committees or Sharia supervisory boards in the Islamic social finance institutions as well. Therefore, in this part of the code, we should cover responsibilities, qualification, and composition of Sharia organ of the institution. A Sharia board secretariat shall be established to assist the Sharia board in carrying out its function, and Sharia research function should be carried out by the Sharia board secretariat. So this is something similar to what we find in Islamic commercial finance institutions, which is also essential to be in Islamic social finance institutions. Next is the operational model. Now, when it comes to operational model, we have to understand that the operational model must be derived from Sharia rules. For example, if the Islamic social finance institution is dealing with zakat, the operational model would be aligned with zakat, and what can be done, what cannot be done from Sharia perspective would be part and parcel of this operational model. So if the financial institutions, such as, for example, say if there are Islamic microfinance institution, then definitely they might be dealing with different sorts of funds and different types of products could be given. So their operational model would be much more complex than that of a general institution dealing with one type of Islamic social finance too. So this is something which should be written black and white so that we don't overdo things and we don't breach the rule set. Next is the Sharia internal control functions. The minimum Sharia internal control functions that ought to be established in the institution shall be covered in this part. The Sharia internal control functions include Sharia review, Sharia risk management, and Sharia audit function. Now, sometimes we often say that these types of Sharia internal control functions are not required to Islamic social finance institutions. It's on the record for commercial finance institutions because their operation is much more sophisticated, much more profitable, and much more complex. But the reality is that the same type of standard needs to be implemented in Islamic social finance institutions as well. Even though our customers in Islamic social finance institutions are not coming or not helping us to make a huge amount of profit, we still have to deal with them with due care and with professionalism. Due diligence is required whenever we deal with them as well. So therefore, best practice in this regard needs to be followed when it comes to Islamic social finance institutions as well. Next is transparency and accountability. This part should govern the legal and Sharia compliance and accountability requirements that ought to be adhered. Conducting of financial audits and utilization of its resources to achieve the institution's objectives must be explained. So even if the Islamic social finance funds are kept by a mosque or any type of religious entity, still they have to follow these standards because at the end of the day, we need to be accountable to the funds which we hold. A clear scorecard or performance and output measurement methodology shall be formulated and implemented to understand where the institutions stand. The way public information will be given through website and other means, and publishing of annual report shall be covered in this part. So how do you continuously disclose what you do with the funds is something that should be done on an ongoing basis. Otherwise, this won't work. Next is collecting contributions, which is similar to all types of Islamic social finance institutions or tools. The way in which the institution will collect contributions shall be clearly described. A convenient and responsible way to collect contributions shall be formulated. So this part is left up to the institution to specify what are the ways in which collection would be done. For example, just now one of the student from the audience said that crowdfunding could be a better way of managing these funds because at least it is regulated. So if crowdfunding mechanisms are used, the rules related to that should be disclosed here. Dispersing of contributions is next. To whom the contributions will be dispersed and the way they can apply to receive contributions shall be covered. An equitable and fair way of registration shall be introduced. In distributing contributions, the Sharia rules that ought to be followed in different types of Islamic social finance instruments shall be followed. So meaning that if it's zakat, the legal recipients should be considered. If it's other types, flexibility is there, but you need to come up with the basis of why you are giving the funds to them. You have to justify according to the norms of your society when it comes to this part. And another thing is, when it comes to distribution, we need to find flexible ways and effective ways to deliver the funds to those who are in need. For example, today with technology, there are a lot of possibilities that were not there previously. One of the ideas which has been floated is using Internet of Things. You can even derive the poverty level of the household, and then you can directly send the funds to those households who are still in poverty without actually asking them whether you are living in poverty, or finding information by physically asking them to come to your office or you physically going to them. So I think it's high time that we try to take advantage of these types of technology and try to provide convenience to those who are the stakeholders of Islamic social finance as well. Next is managing contributions. A transparent way in which contributions received will be managed shall be formulated. If the money is kept in an investment bank account, what happens to the returns must be clearly discussed. To manage the contributions, a special investment and liquidity management committee shall be set up. So these are like things which are not new to us, but when it comes to Islamic social finance, we don't consider these things as part and parcel of it, and therefore it leads to weak governance. Next is strategic collaborations and affiliations with other institutions. It's important to leverage strength on others to move the institution forward. As such, the way in which strategic collaborations and affiliations will be made should be made clear in this part. So basically, you can't have all the resources you want within the financial institution because of the way how we set up those financial institutions, and we don't have so much money to spend on the operational costs. So in that case, strategic collaboration would definitely be helpful, because if you need certain type of skill set, if you can just collaborate with the right partner, you will be able to get those skills and you can share the resources to get optimal result. Next is civic engagement. It's imperative to specify the ways in which civic engagement would be and the level in which these engagements will be carried out. Because again, if you don't have resources within yourself, you can still get engagement within the society, within the community, and create an impact to the society. So that's why it's important to have this part as well. Next is human resource management. Every institution shall have dedicated staffs to carry out its functions, and no institution shall 100% rely on volunteers. Now, this is often something we see practically happening. All the people who are coming to these institutions, except for the main person, would be volunteers. If you graduated and if you go back, people would invite you to be volunteers, and as a part-timer, you will just volunteer your services. I'm not saying that volunteering is bad, but there should be some dedicated staff within the institution to manage the funds. You can't 100% rely on volunteers. Minimum, a financial officer or an accountant shall be hired, and how human resource management is conducted shall be made clear. Next is volunteers management. Sometimes in the news we hear that even volunteers do such activities that lead to mismanagement and corrupt practices of Islamic social funds. Therefore, it's very important that we have clear rules in managing volunteers as well. The way in which volunteers will be managed shall be clear, and guidelines should be developed to manage them. Okay, next is continuous disclosure obligations. Quarterly impact and financial reports shall be published by the institution to boost the confidence of stakeholders to the institution. I think this one is very important, because at the end of the day, if the contributors doesn't know the impact they are making, then they won't be motivated to put more money. And because of that, we can lose a lot of funds. Next is establishment of HISPA, Ombudsman institution. A HISPA institution within the institution shall be established to hear grievances and complaints lodged. Further, on its own initiative, the members appointed in the HISPA shall check from time to time whether the operations of the institutions align with its objective and rules enacted to follow. Now, this is a very important part which we often neglect, maybe because we are just dispersing the money, and therefore we believe that there wouldn't be any grievances from those who are receiving it. But actually, sometimes it's very important that we cross-check whether what we do is correct, and whether what we do makes it easier for people who are receiving money to receive it, is something we have to check. Now, there are complaints which are coming from those who are applying for zakat or other types of Islamic social finance funds, saying that the procedures put in place to interview them to ensure whether they are eligible or not is also a cumbersome process that makes them feel that they are just washing their dirty linen in public. This shouldn't be the case. We should have a balanced approach in interviewing them and determining whether they are eligible to receive funds or not. And if there is a way that we could just do it in a convenient manner to them, rather than always asking them to physically come to the office and sit and wait for the interviews to happen. If there's any other mechanism that could be followed in an amicable way, that should be the way to do that. And instead of asking for multiple documents or documents that are irrelevant and that are difficult to obtain, we should also look at what is the most convenient way of putting such applications. Next is technology governance. How technology risks are managed shall be covered in this part, including the scope of its use and the security measures taken. So often we say crypto zakat or even blockchain technology or artificial intelligence could be used when it comes to managing these types of Islamic social finance instruments. If you are using any type of technology, even if you're using the basic technology, at least there should be some kinds of risks that would be emerging from that we should mitigate, and to ensure that we need to have a policy to cater for that. And the final part is managing operational risks, including Sharia non-compliance risk. How the operational risks are managed, including Sharia non-compliance risks, shall be clearly stated. How the consequences of these risks shall be managed are important to be laid down. So this is again something we often forget about, because we believe that if it's zakat, as long as we follow the zakat parameters, there will be no way we could encounter a Sharia non-compliance risk. But actually, if we do check and balance, if you put the Sharia internal control mechanisms in the institution properly, we will see that there would be some instances which could lead to such risks, and we have to overcome them by putting the right procedures in the place. Therefore, it's important that we try to manage them accordingly, rather than saying that, you know, it is not something that will happen ever, and therefore we don't have to do anything. So this is something we should be mindful of. So what is the way forward? Of course, even if we adopt a uniform governance code that could be applied throughout the country or throughout the world today, we can't see the results just overnight. We have to wait, we have to practice it, we have to implement it, we have to understand the issues in implementing it, and then only we can have a good result. So result will happen, but it'll happen over time and not overnight. But what we need to do is we have to understand the importance of having such mechanisms put in place, and we have to start today so that at least tomorrow we can see better results. So with this, I conclude my presentation and will open the floor for any questions or any opinions on this matter. Thank you very much.
Assalamualaikum, Prof. I want to ask one question. So regarding like, I just want to make example, like for example, like Malaysia have one that very small wakaf company. Like is it possible that we ask them to follow the regulation that you proposed just now in one central I mean one central rather than put in different way, because it's, the cost is high for hire that such accountant or others people who are very skilled in their related job. Thus, is it possible that we ask the small wakaf companies to follow in one central organizations
to leverage on another organization's skills, right?
Yeah.
Yes, that could be done, provided that it doesn't breach the internal regulations.
Means that the government need to support this too, right, Prof?
Yeah.
Okay, thank you.
Any more questions or opinions on the topic? If not, I think it's the end. Azra.
Assalamu alaikum.
Wa alaikum salam.
I have an opinion regarding in placing like proper punishment for breaching any laws, because if we go to Islamic history, we can see that in the time of Abu Bakr radiallahu anhu, that even he waged war against those who did not pay zakat. So I think if we see Islamic commercial finance, there is no like an obligatory thing like in a collective manner, but at individual manner it is still muamalat. But if you see, if it is zakat, it's so serious that it has been identified in the history. So in developing a proper Islamic social financial governance framework, I really believe that it is very important to even suggest or to show something, even if it is fine or imprisonment. It should be like very severe and significant, because the matter is very serious in the eyes of Sharia. That's my opinion. Thank you.
Yes, we could put a punishment, but however, we're talking about a governance code, right? Not a law, which
Yes.
could be legally enforced. If it's a law, definitely you can have that type of element, but if it's merely a governance code, which is persuasive for any institution to follow, then self-regulation mechanism would be the way how it would be implemented. But I mean, it depends on the creativity, it depends on the willingness of the institution. If
Yes.
they want to have such a feature in the code in which they follow. So thank you very much for the
Thank you.
opinion. Any more thoughts on this? If not, I guess we will end the session. Over to you, Azrul.
Okay, thank you, Tashat. Farisha, maybe you can close the session since we don't have any more questions from the participants.
All right. So if there are no further questions from the audience, we would like to thank you, Dr. Aisha Muniza, for the highly informative discussion. And for the participants, do not forget to click the survey link shared in the chat box area and complete the feedback survey. Now that we have come to the end of the session today, we hope to see everyone again in our following upcoming events. Thank you so much and have a great day ahead. Assalamualaikum.